Thank you for joining. Good evening, everybody. So we'll start the session now. Good evening to everyone on today's call. My name is Oluwafunke, to be your host for begin the influencing series. Can anybody hear me? If you can hear me, please just signify by using an emoji to know if I need more people to confirm if they can hear me. All right, thank you very much. Thank you so much. Thank you very much. All right. So good evening once again. Like I said, my name is Oluwafunke and I'm honored to be your host for today's session. We kickstart our influencing series. It's under the platform of RCCG 180 Degrees Young Adults and Youth Church. And as a church and as believer, we cannot start this without giving thanks to God, without giving thanks to our Creator for the privilege to be alive today to be on this call. So by doing that, I would love to bring up the shepherd of RCCG 180 DYC, that is Pastor Tosin, to give us the opening. Pastor Tosin, sir, can you hear me, sir?
Yes, I can hear you. Okay, good evening, everyone.
This is the session for us with a prayer, sir. Thank you, sir.
Right. Our Father, we thank you tonight. Thank you for bringing us into a very new month. Thank you for how you have been shepherding us. We commit this session for this particular training into your hands. Please inspire our hearts, impart us with knowledge. Now, facilitator that we have prepared for tonight's session, give her wisdom to be able to deliver accurately and precisely. Thank you for every one of us. And at the end, let your name alone be glorified. In Jesus' mighty name, I pray. Amen.
Amen. Amen. Thank you so much, sir. Thank you so much, sir. So once again, good evening to everyone who has joined today's call. So we are so happy that you are here. So we're just going to kickstart already. And we know that today's topic is demystifying the new tax law. So whether you are a small business owner, an employee, or someone that is just starting out in the business world, understanding tax is something we all need to take seriously. But today we have a capable consultant that she's going to break down everything we need to know in simple and practical ways. And I'm so excited tonight to hear from her. And without further ado, I'm thrilled to have Christiana Oyeniyi with us here tonight. She's our guest speaker, our facilitator. She's an experienced tax consultant who has worked with businesses and individuals to ensure that they stay compliant with tax law. And with Christiana's wealth of knowledge in the area of tax management, and she has helped so many to navigate the tricky waters of taxation. And tonight, she'll be sharing that knowledge with us. I'm sure that we all have our pen and jotters or notepad to write down something, because I know that we'll definitely learn something from this new tax law, something we can use come 2026. So let us welcome Christiana Oyeniyi, and alongside our colleagues, Deji, Ayo, and Blessing. They will all be sharing their knowledge with us tonight. So we are going to kickstart first with Christiana. Christiana, are you ready for us?
Yes, thank you, Funke. Good evening,
thank you. Over to you.
Thank you. Can you hear me?
Yes, we can hear you. Please go ahead.
So, good evening, everyone, and thank you very much, Funke, for the warm welcome. Thank you very much. I'm grateful for this privilege. Thank you, Pastor Tosin, Pastor Adaralegbe, for the opportunity. I'm excited to be here. And I'm looking forward to a very engaging conversation, having known that there are a number of news carrying both true and untrue comments about the Tax Act. But today we'll be making it very simple. So to comment, I would be turning off my camera so that we can save bandwidth, and then we can continue with the session. I would share my screen and I would confirm, and I want us to confirm when we can see them and when we can see my screen. Thank you. Can anyone see my screen now?
Yes, we can.
It's loading.
Yes, we can.
Yes, so we can start. Like Funke said, this session was organized by RCCG 180 Degrees Young Adults and Youth Church, just for us to understand the tax laws that was recently enacted. So in today's session, we'll be introducing the topic. We'll move on to having like an overview of the acts. Then we'll delve into the impact on individuals, the impact on corporate before we conclude. Then we'll take a question and answer session. So in the course of the session, at any point, if you have questions, you can drop it on the chat box. My colleagues are willing and available to attend to them, collate them so that we can have, in case we have repeated questions, we can all collate them and answer them in good time. At the end of the session, we'll take questions. So let's note them down, let's pen them down, let's put them in comments and all of that. So this session is going to be very engaging. So at any point you're confused about what I say, you can just note them down or pen them down so that we can be able to finish with the session, then move on to the question and answer where we'll be able to understand and respond to our questions. So talking about the tax reforms, you must have heard about the tax reforms in the news, and maybe glimpse of one point will just pop and it will be a conversation. This is not actually the first tax reforms happening in Nigeria, but the difference is the fact that this is like an overhaul of the tax system. Prior to now, we have Finance Acts of 2019, Finance Act of 2020, of 2021, then of 2023. Those different acts have updated a part of the law at some point. The one we can relate with easily would be the VAT rate. A Finance Act actually updated it from being 5% to the current 7.5% that we now have. So this Reform Act is not the first, but this is more encompassing compared to the previous acts that we've been having. So when we hear the Nigerian Tax Reform Act, a committee was practically set up for this purpose. The Presidential Fiscal Policy and Tax Reform Committee, headed by Mr. Oyeniyi, it was set up they convened to be able to review all of these acts, and they didn't stop at just enacting or coming about the laws. They would also be here to implement. So the idea is, they are not just saying this committee will be in charge of the laws, like coming up with the laws, but they would also help with implementation. And by implementation, the acts are already out. We would get to see things around the circulars coming up to say that this is how this thing is better explained, because the wordings of the law at times might not be as clear. So they will still come up with circulars and all of that. So the committee is ready to respond during the implementation phase. So when we talk about the act, it came about, the president signed it into law 26th of June 2025, and there were 4 of them. So when we talk about the reforms, we think about 4 different acts that was enacted. These 4 acts came about, and the major objective, the first objective is that it will consolidate and simplify the existing tax framework. By consolidation, what do we mean? In the current regime, we have a separate act that deals with individuals. That's the Personal Income Tax Act. We call it PITA. We also have the Companies Income Tax Act that deals with company tax. Then we have the Capital Gains Tax. We have a number of other acts. The VAT Act is separate. The VAT regulation is also there. We have a number of acts that are standalone acts. What has this reform come to do? It has come to consolidate all of these numerous acts into one document, which we'll be talking about in subsequent slide. So the first objective of this reform is to consolidate and simplify the existing tax framework. The next bit is to harmonize the tax administration across tiers of government. In harmonizing, there had to be like a change of name. For instance, we currently have the Federal Inland Revenue Service administering federal taxes, but it had to be changed to Nigerian Revenue Service so that it can collect every revenue that relates to Nigeria, not just federal taxes. There is a need to actually still amend the constitution so that the taxes that were stated in the constitution to be collected by the state can then move to the NRS, or there will be an handshake between both the State Internal Revenue Service and the Nigerian Revenue Service. There will be a consolidation, there will be an handshake so that everything is harmonized. That's in terms of the administration. Then the last bit is to promote economic growth and digitize the tax administration. Not everybody will agree with this part to say that will my tax indeed promote economic growth? The taxes that I'm paying, is it really doing the work? Can I see my tax work? But it's not just going to stop at that. The essence of the reform is also to digitize tax administration, where you don't need to ask for physical record. By default, on a real time, they have access to your invoices and all of those things. We'll be talking through all of this in subsequent slides. So having understood what the reform is about, understanding that it's 4 of the acts, and the objective of this, we will now move into the overview of the new tax act. Like I said, we have 4 of them, and each of this act is answering one question. At any point you are in doubt of what tax to pay, what act do you refer to? You go to the Nigerian Tax Act. Its abbreviation is NTA. I'm sure we are familiar with NTA. NTA is like a network station already that we used to bond with at some point growing up. But the NTA would answer the question of what taxes should we collect as a country, or what tax should I pay as an individual or as a company. The answer is in the NTA. Then the question of how should we collect these taxes is answered in the NTAA. That's the Nigeria Tax Administration Act. This shows the process of collection, penalties that are attached to non-compliance, and everything around how to collect the taxes in the NTAA. Then we move on to the Nigeria Revenue Establishment Act. The Establishment Act had to come up because the FRS, like I said earlier, would change name to Nigerian Revenue Service. In that light, that Establishment Act would establish the NRS. So we will not be hearing FRS come January 2026. We'll be hearing NRS. Moving on from that, the last act is the Joint Revenue Board Establishment Act. That's in charge of the oversight of the Taxpayers' Right Protection and Dispute Resolution. So when you hear Reforms Act, think of these 4 acts. And when you think of these 4 acts, know that they answer each question of what, how, who, and the oversight as an act. Then we'll be trying to understand the impact of all of these acts on individuals and on companies. In doing that, we are going to be spending more time in this slide. So I want us to be very, very attentive. The first thing that came to mind as a debate on the social media space was the fact that people started coming up with things like, come January 2026, your income will not be taxed, government will be able to access your account, they will tax it from your account, things like that. Now, I want us to be the change agents of spreading the actual truth about this act. The first things I want us to understand is the fact that the taxation of individuals in Nigeria is not a flat rate. So anybody that comes to you to say that come January 2026, you'll be paying 30% tax as an individual, that is first of all wrong. There is no flat rate to taxing individuals in Nigeria. But when it comes to companies, there are rates doing that. Let me explain. By saying that there's no flat rate, it's for us to understand that it's a graduated scale. By graduated scale, I mean, when I see an individual earning 5 million, for instance, the old law you can see that the prior rate ranges from 7% and the top rate was 24%, or is still 24%. But the current law started from 0 or starts from 0%, and top range is 25%. In speaking to this, we'll see that the amounts that are taxed were quite small. You'll see that in the PITA, like I said, that was governing the taxation of individual, or that is still governing the taxation of individual, your first 300,000 as an individual, any 5 million, will be taxed at 7%. So the next thing to do is take out 300,000. What you have left is 4.7 million. So you take out another 300,000 out of the 4.7 to be taxed at 11%. That is how PIT is administered in Nigeria. Your old tax will not just say maybe you're earning 5 million, just say times 24%. No, it's a graduated scale and it's a progressive tax system. By progressive, it means the higher you earn, the higher you pay. There's another form called the regressive tax system, where low-income earners pay more than high-income earners. And the proportional tax system is a system where there's a flat rate. There's no recourse to who is paying. Low-income earner, high-income earner, there's no recourse to your status. It's a flat rate. But in Nigeria tax system, and for individuals, it's a progressive tax system. And the higher you earn, the higher you pay. And the taxes that you're meant to pay is PAYE, which is the pay as you earn. And from this conversation, you're able to understand that it's not a flat rate, but it's a graduated scale that is determined by your level of income. So your level of income will grow to the point where you either cross the next cadre until it gets to the last cadre, where you've hit the maximum rate. So when you're earning any amount, if the first 300,000 is at 7%, the next at 11, until you exhaust that income and now fall on this above this, the total will now be taxed at 24%. I want us to note that this is not monthly figure. This is an annual figure. So by 300,000, I mean 300,000 per annum, which is quite small. So moving on to comparing the former rate and the new rate. The good news is that low-income earners, meaning earners of 800,000 chargeable income, will no longer pay taxes. I repeat that. It means that anyone that earns an annual chargeable income of 800,000 will no longer pay taxes come January 2026. The understanding is that your gross income is not necessarily the 800,000, but the understanding is that if after deducting all the allowable deductions, your final balance is 800,000, your tax is 0%. That is about low-income earners. And the others would actually get a 0% rate on their first 800,000. So everybody, because this band is progressive, everybody on a flat, on a level playing ground would get that first 800,000 at 0% come January 2026. So the understanding is that once you cross, then you start being assessed to the following rates. The next 2.2 will be at 15% and all of that. So if you look at this graduated scale in the NTA, let's start using the abbreviations and let's get familiar with it. When we start looking at those graduated scale in the NTA, we'll see that when we add up everything up until this last line before the above point, everything sums up to 50 million. It means that the people that earn 50 million per annum would now be taxed at 25%. That means their money will cross up until the 25% mark. So their first will be 0%, their next will be this. So let's give a very practical scenario where an individual earns 5 million naira per annum. The 800,000 is at 0, so we are left with 4.2 million. Then we'll take out the next 2.2 at 15%. So we calculate 2.2 at 15%. We'll document that. Then what we have left is 2 million. In checking that, we'll see that the 2 million will fall within the next 9 million. That means that person's revenue stops at this third line, and that 2 million will be taxed at 18%. In scenario where your money exceeds 5 million, it will go further until it gets to the last line where you earn more than 15 million naira per annum and you'll be taxed at 25%. So that's the understanding about the tax rates. I'm hopeful that we understand this, and if we don't, we can always put it down in our comment section and wait till the end for us to take questions. But it's not a flat rate, it's a graduated scale, and it's not as complex as we see. Just let's take it bit by bit. So moving on to the next controversial thing, there has been news around, do I need to get a TIN? That's talking to the tax ID. Not everybody needs to get a TIN. And by TIN, thank you. So we're done with the tax ID part. So there's no cost to worry about, do I need to get a TIN as an individual? If you currently have a taxpayer ID for Lagos State or any other ID that relates to any particular state in which you reside, then it's okay until we get information to say, get this, get that. But there's no need to worry about anything. And the other bit of it is, you're worried about the government's access to probably your account. There's nobody that's going to tax your income by virtue of just seeing your bank details or bank inflows or outflows. The idea is, the system of taxation in Nigeria is not a system where the government would place tax on whatever income they see. The idea is you come forward by yourself, you would self-assess yourself. This is what I earned, this is the tax payable. You would submit the returns as an individual. It's a self-assessment system. So at any point they come for you, will be at the point where you had submitted that self-assessment and you've declared it. And we are meant to have integrity overall, though we are worried about if our tax monies are working. But the idea is we need to do the right things. And the right thing is to account for our income appropriately and pay the right taxes. So when they have access to our details, they will not come for you and say, but you declared 5 million. We can see different inflows. We can see 10 million from XYZ. We can see all of these things. Can you come and answer? They will not naturally just come and say, okay, let's up on it and tax it and deduct from your account. No. They will call you out for questioning, like assessment risk, and you can come and respond. Will be okay, money is for this is for that. So since this conversation is to even know us to start doing proper descriptions with our transfers. For instance, you don't just transfer money to anybody and you just leave it blank. Let's start describing those things. That is not even enough, because as business owners, it's a different conversation, because we see many business owners combining both their personal inflows, personal expenses with their business expenses. We'll get to that part of it. But the idea is the tax application number, the access to your account and all of that is nothing to be worried about. But when you're doing the right things, it's just for transparency's sake. The next conversation is about your income from government bond. So if you have any investments that relates to government bond, currently what we have is just for federal government bond. So there's an exemption on federal government bond, but now the NTA has expanded it to not just federal government bond, to both federal government bond and state government bond. So when you have investment in this kind of security, income from such bond is free from tax. And if you want to up on anything on the act, like I said, at the end of the session, I'm going to share you a link where you can download the actual copy of the act. And the one that you should be particular about to know what tax to pay the NTA, you should jump on section 163 of that act. What do you want to find there? To see your income that are not going to be taxed. So everybody wants to know their tax rate, everybody wants to know, but you also want to know your income as an individual, as a company that should not be taxed. So up on section 163 of the NTA, and ensure you read through and see the one that jumps at you, the one that you can relate to, the one that relates to your business, so that you can know that yes, this part of my business will not be taxed or is exempted from taxes. Moving on to the definition of residence. The conversation around this residency was mostly about influencers. By that, I mean influencers are saying that I don't have any Nigerian employer employing me. I'm making my money from YouTube. I'm making my money from Google. I'm making my money from XYZ. Why should I pay tax to Nigerian government? Like I said, when I spoke about the influencers, I was saying that the basis to check if you are taxable in Nigeria is not based on the source, meaning it's not based on where your income comes from, it's based on where you reside. And it's not just about where you reside. There are a number of things that are being defined in the NTA to tell you that if you reside in Nigeria, you have a permanent place for domestic use, you have a substantive or immediate family ties in Nigeria, or you spent over 183 days in Nigeria, or you're a Nigerian diplomat abroad, you're meant to be taxed in Nigeria. The other thing I wanted to speak to is the definition of income that is taxable in Nigeria, where they mentioned in the current regime, even went as far as saying that any income brought into Nigeria is taxable in Nigeria. But the NTA has now corrected that to say that it has to be a revenue that is accruing in Nigeria or that is derived from Nigeria. So if you send money from abroad to Nigeria, you are not going to be taxed based on that, because you're just meant to, the income that should be taxed in Nigeria, income accruing in Nigeria or derived in Nigeria. So the idea is for you to know if you're taxable in Nigeria, just read through all of these conditions. If you tick any of these boxes, then you'll be taxed in Nigeria. Moving on to the next session. Can you hear me?
Yes, we can hear you.
Okay. Yes, we can hear you.
Thank you. So moving on to the next part, speaking to the tax on chargeable gains. So we have this capital gains tax where, for instance, you have an asset that you bought at so amount, and at the point of reselling, you sell at a gain. Currently, what you need to pay is a CGT of 10%. But by virtue of the enactment of the NTA, CGT is no longer standing alone. It's now going to be based on who is paying the CGT. If it's an individual, you will sum it up to their income and tax it like a graduated scale. If it's a company, you will sum it up as part of their normal income tax computation and tax it as a company. So it's no longer standing alone. So the conversation you hear is CGT rate increase for companies now. CGT rate increase from 10% to 30%. That's the conversation you hear around. But in actual sense, CGT now, tax on chargeable gain, is now paid based on who is paying. If an individual is meant to pay, has made a gain that needs to be taxed, it will be cumulated with his normal income and pass through that normal graduated scale. If it's an individual, it will be part of its income tax computation and it will be charged along depending on the rate of the tax for that company. So CGT is no longer standing alone, but it's going to be linked to either income tax for individual or income tax for a company, meaning that it will be taxed based on who is paying. Moving on to the next bit, relief for individual tax purpose. So currently what we have is a consolidated relief allowance, and we have some other relief when you are computing PIT. We have relief like the pension. When you contribute pension, it's an allowable deduction as an individual. When you contribute to NHF, it's an allowable deduction for individual. But now CRA has been totally expunged from the NTA, meaning the Nigerian Tax Act, meaning CRA will no longer exist going forward, and they are replacing it with rent allowance. And by rent allowance, what do they mean? They mean that they will either give you 500,000 as a relief, not in cash now, 500,000 or 20% of your annual rent paid, whichever is lower. Emphasis on whichever is lower. The idea is, if for instance my rent is 1 million naira, to get my relief allowance, I will calculate 20% of my rent, which will give me 200,000. You can see that 200,000 is already lower than 500,000. So the only relief I can enjoy is 200,000. But at any point that I have a rent, that when I calculate the 20% and it exceeds 500,000, is the lower, which is the 500,000. That's the maximum they can give you. If you like have rent that is 1 billion, 20% of it is more than 500,000. We ditch that calculation and we focus on 500,000. That is what the rent relief allowance is saying. The second question on this rent relief: I'm a couple. My husband and I stay together, and one of us, my husband pays the rent. Will we enjoy it? Can we both enjoy it? The idea is it's only the person that pays it that enjoys it. So for me, as the wife in this instance, I will not be able to enjoy any rent relief because my husband has enjoyed it on his own computation. So those are the kind of issues that we'll get to see when this new tax laws come into effect come January 2026. Then the last conversation around individuals is compensation for loss of office. Currently, what we have in the law is saying that if, for instance, someone loses his or her job and they are compensated, 10 million naira, once it exceeds 10 million naira, you will be taxed on the excess. Meaning that anything above, they would take out 10 million naira and the balance will be taxed. But once it does not exceed 10 million naira, you can go scot-free with your compensation for loss of office. But the NTA has revised that figure, looking at the realities of things, to say that 10 million naira does not really make sense anymore. Let's increase it to 50 million naira. So if someone is compensated for loss of office and it is 50 million naira and below, it is tax-free. But once it exceeds that 50 million mark, the excess, emphasis on excess because there was a time where there had to be a finance act to correct that part, because people were worried that is it the first 10 million or the excess. So another act came about to say that it's only the excess that should be taxed. So the first 50 million is tax-free and the excess will not be taxed. So that's the conversation about individuals. We will move quickly to the corporate bit. Are we still here? Can you still hear me?
Yes, we can.
Yes, we are with you, Christiana. We can hear you.
Thank you very much. So moving to the corporate, I will not do so much here, but we just picked some of the general things because we have sector specific impact and we cannot go through all the sectors. So looking at the rate of tax, for instance, currently we have to classify a company, you're either small, medium or large. By small, it means that you're earning an annual turnover of 25 million and below. You are categorized as a small company. And by company, I don't mean business name. I mean a registered company. So by medium, it means you earn between 25 million and 100 million. That is the current law. And by large company, it means you earn more than 100 million. This has changed. We do no longer have 3 classes. We now have just 2. We have small company and other companies. So if you are not small, you are other companies. And by small, the mark has changed from the 25 million to 50 million. There's a lot of people hearing 100 million, 100 million, 100 million. I would explain. So I told you we have 4 acts, the NTA, the NTAA. So the NTA defined small companies as company with turnover of 50 million and fixed asset of 250 million. So both conditions must be fulfilled, meaning you must have 50 million and below 50 million, and your next asset must not be more than 250 million. But for VAT purpose, the definition in the NTAA, that's the Administration Act, is different for small businesses. It defines small businesses as businesses with turnover of 100 million. It means that if you're a company and you have transactions and you envisage that for the whole year, your transaction might not exceed 100 million. For income tax purpose, you will pay CIT because you exceed 50 million. But for VAT purpose, so we need to delineate both. There's a definition for small company that says 50 million, and there's a definition for small business that says 100 million. So let's understand the difference. When you're assessing me as a company for income tax, the mark to check is, am I below 50 million? If I'm below, I'm small. If I'm above, I'm large. But if I want to assess if I should be even adding VAT to my invoice, do I envisage that I will have more than 100 million this year? If not, I don't need to add VAT to my invoice, because typically VAT is on the final consumer. So I should not even add it to my invoice if I already know that I will not meet 100 million in that year. That is talking about the rate of tax. Then moving on to development levy. There's a new introduction of development levy. By development levy, we don't mean the development levy that we pay in Lagos State, for instance, where you calculate when you're submitting payee. Is a different federal tax that is now introduced. Currently, you see people computing CIT, that's the company income tax, tertiary education act, that's the TET, NASENI, NEET, that depending on the industry, that's like the IT levy, the Nigerian Police Trust Fund, a number of levies that you pay after paying CIT. So now, what the development levy has come to do is consolidate all those multiple taxes that you pay after CIT into one tax called the development levy at 4%. So that's speaking to development levy. Then moving on to impute VAT. What we have currently is that the only time you can claim VAT, impute VAT, is when the goods is bought for resale. For instance, I'm a manufacturer and the raw materials I bought, I suffered VAT on it. I can claim VAT, I can claim that impute VAT when I make sales, to say that if I had paid 5 naira on my raw material and I'm meant to pay 10 naira on the sales, I can take out the 5 naira from the 10 naira before I now remit the balance to the government. That is what is obtainable now. It's only when the goods are for resale, that's when you can claim impute VAT. But going forward, effective January 2026, you can claim impute VAT on services. For instance, a Temu and maybe a vendor that is outside Nigeria and the Nigerian buyer. A Temu will charge the merchant outside Nigeria money for using their platform, and they want VAT to it. And the Nigerian buyer too will also be charged VAT. Because I engage Temu or I use their platform to be able to sell my goods, I can claim the VAT I suffered that Temu is adding to my money. I can claim it from the sales I make to the Nigerian entity. Now, because it's a service. But before now, anything service, you cannot claim impute VAT. That's the understanding about impute VAT going forward. So it expands it to services, it expands it to fixed assets. So when you buy fixed assets and you use it for business, you can also claim the impute VAT on those fixed assets. The next conversation is the surcharge on fossil fuel. This conversation was also everywhere, and the impact is that it might likely increase the cost of this fossil fuel because it will be computed based on the retail price of all chargeable fossil fuel. But the caveat here is that there has to be an order. It was formerly in the FEMA, like the act around road construction, but they were not collecting it at the time. But now they brought it into the NTA, but there's a pause on the effective date, saying that yes, it's in the NTA for them to charge 5% on fossil fuel, but the minister has to issue an official gazette to tell us the effective date. So the 5% on surcharge is not going to come into effect January, but it's in the act. But it's also in the act to say that this thing would come up later, but the minister has to issue an official gazette to tell us the effective date. That's about the 5% surcharge of fossil fuel. Then lastly, we talk about the effective tax rate. The effective tax rate is a new kind of check. What we have currently is minimum tax, to say that if you probably have exceeded your first 4 years, or you are not in some set of industry and all of that, you would also, every time when you compete as a company, you will check if you exceed minimum tax. If your minimum tax is higher, you pay the minimum tax. If it's lower, you pay the tax that you're meant to pay. So there's this new introduction of this effective tax rate. What is the effective tax rate talking about? It's saying that you will check every time. There's a basis for computation in the law. Every time, if you don't exceed 15% of your cover tax, then you would pay the differential. Meaning, if you calculate it and what you have is less than 15%, you will pay the balance of the 2%, for instance. Maybe you met 13%, you have to pay the differential. You have to always meet 15% effective tax rate. But guess what? Not everybody is in this bracket. The only people that are in this bracket, there are two of them. If you're part of a multinational group, your company is Nigeria, but it's part of a multinational group that has 750 million euros or its equivalent, then you're in this bracket. You being part of a multinational group that has an aggregate group turnover of 750 million euros or its equivalent, you are in this bracket. The next set of people are Nigerian companies or any other company with aggregate turnover of 50 billion, then you are in this bracket. So any other person that do not fall under this, you don't need to check for effective tax rate per year. But if you qualify for any of these two conditions, you should check for this every year. So we're done with the impact on individual, impact on companies, and we'll be concluding with this. So speaking to the conclusion, we have a number of people. So yeah, I'll be talking about business names because we have many people operating as business names. They have small businesses that, if you check the certificate of incorporation, you see that your number starts from BN. Means you're a business name. And what does that imply? Implies that any profit you make from that business is going to be taxed in your hand as an individual. Meaning that even if the money is not up to 50 million, you will still pay tax on it because it is being taxed as an individual. Because as an individual, the only money that you are going to be exempted for is your first 800,000. So if you make 10 million naira from your small business and you've taken out all your expenses, completed everything, and maybe the balance of the profit you have is 2 million naira, it will be taxed in your hand. But guess what? As a business name, if you register that company as a limited liability company, though there are obligations that you need to do, tax obligations and all of that, but if you bring it under a registered limited company, you will not even have to pay any tax because 10 million naira is small. The mark is 50 million naira. So until you reach that one, that's when you'll be paying, because that one is 0% for a company. So business names, any amount you make, once it exceeds 800,000, it will be taxed in your hand as an individual, because the business is going to be, it's like your breath is what is carrying the business. It's not a separate entity from you. So whatever small business you have currently, that's a business name, whatever inflow you come with would be taxed in your hands. And the idea is this: we need to start keeping proper records. By proper records, we should have separate accounts for yourself and for your business, even if you don't want to upgrade it to a limited liability company. Let's be in a situation where your business name account, you can trace your inflow for the business, you can track your expense for the business. Not that, for instance, I'm a fashion designer and I get like 120k from a customer. I'm like, let me just go and buy units for the house. It's not for the purpose of the business. That way you cannot account for it, and you cannot assume that you can take allowance for all of those things. So if it will take you to start paying yourself salary, of which you will still account for the income tax later, it is okay. Let's have a structure where every of your business activity, you're accounting for it, you are having a separate account for it, you are accounting for the expense on a day-to-day. So that when there is need for a call on your records, there will not be so much trouble that you'll not be saying, "Oh God, help me." At the point where you feel like everything is mixed up, that even you cannot remember this transaction, you will fall into the point where you want to start bribing. And guess what? The person you bribe today might not come tomorrow as the tax officer, and you have to keep doing that over and over. So why not do the right things? The right thing is to ensure that our records are clean come January 2020. Have separate accounts. If you don't want to go to limited, remain as your business name, but make sure that you're operating and your records are complete. Moving on to that, we would encourage corporate entities to engage professionals, because at the end of the day, when I look at this law, even as a tax consultant, it can be sounding like Greek sometimes, because reading through it, having to understand the word is sometimes be like, I wish there is an NIV version of this tax act, or maybe a TPT version of this tax act where it will be more subtle. I can relate with it. But guess what? We just have one version. But there's the committee that was set up for this reform also mentioned something like they need to translate the laws into Yoruba, different languages and all of that. So we'll be seeing more of those things in the coming months. But the idea is, if you manage a company, don't be too conservative on engaging professionals, because there are more stringent penalties in the NTA. There's a particular one I just remembered, and it says that, for instance, if I am a company and I want to engage a vendor, and that vendor does not have a TIN, and I give that vendor work, by TIN I mean the normal TIN for company. So if that person does not have TIN and I give the person work, and the person has done the work, I paid the person, and the person has gone, guess what? FRS would ask me to pay 500,000 for engaging somebody that does not have TIN. What does that tell you? Big companies that already know that the FRS, which will become the NRS, the Nigerian Revenue Service, would penalize me for engaging you. What would they do? They would rather engage somebody that is registered as a limited liability company that they will not pay penalty on. So those are the things that we need to be aware of. So when we see news flash or news headlines, I've already told us that the source is here. So there's this, if you go to the fiscal reforms website, just type fiscal reforms, you will see the website, and there you will be able to download the act. Or when you want to get valid information, Taiwo Oyedele is the chairman for that committee. When you see him talk, yes, you can take his word for it, and not just taking it. Whenever he says it, ChatGPT is there. Just tell me what section of the law speaks to XYZ, just for you to double check. That way, you are sure that you have something to hold on to in terms of understanding, not just running with hearsays on social media. So at this point, I'll be concluding. So we need to just stay informed, and we should only rely on accurate information. We should not just run with hearsay on social media by just saying this person is just saying this thing, and we just pick it up and we start carrying it around. We need to fact check every news that we hear. So this conversation is mostly about letting us know where to pick the right information from, letting us know the need to know what is happening come January 2026, and also carry this same news around so that people that have a different view, or people that do not even want to be compliant, you tell them it's more expensive to be non-compliant. So on this note, I'll be closing, and I'll be saying thank you everyone for listening all through the session. So we'll be taking questions now.
All right, thank you so much, Christiana, for that wonderful session. I'm very sure that a lot of people must have just something down. And your colleagues, Blessing, Afolabi, and Adedimeji, they've been responding to the questions on the chat box. Thank you so much. So yes, I have a question regards the compensation of loss of office. Can you hear me, Christiana?
Compensation of what?
Loss of office.
Okay.
Okay, so my question is, say for instance, I already declared my income for the year 2026, right? And I already paid my tax for the year. Then maybe like come 2028, I lost my job and I've not gotten a job. I've not gotten a job for a very long time. Will I still declare my income, or I'll not declare anything because I don't have a job? I'm not receiving any income.
You mean, are you meant to still file returns?
Yes. Am I still meant to?
Actually, I would say yes, because that gap. I've had a scenario where an individual said that she was out of work for a long time, and when she resumed back into another organization, there was a gap, and the tax office was asking that what happened between so years that she did not file any returns. Why is there a gap between her work experience here? And the response was that she had to provide bank statement for that period to show that she did not receive anything. So before you get to the point where they will be asking you that period I said you did not receive anything or you did not work, bring your bank statement, file the return and file it as 0. You can actually do that. So it's better you file it, but yes, you know that it's 0, and you already know that you have evidence for saying that yes, I was not engaged during this period. So that works. So it's not related to compensation of loss of office. Compensation of loss of office is a situation whereby somebody worked for a company and maybe they had to let them go, and they pay them a lump sum. So you're saying that if the lump sum is 50 million and below, no tax on it. But if it's like 60 million, they will remove 50 million that is tax free and tax the 10% on that graduated scale. Would that be okay for you?
Yes. I got the answer. Thank you very much. So to every other person on the call, do you have any questions for Christiana and our colleagues so that we can sort out the questions before we end up the session? Do you have any questions? Please, if you have any questions, can you raise up your hand? Okay, so I think we have Isiaka. Isiaka, please unmute your mic.
Hi, good evening, everyone.
Hi, good evening.
Good evening. Thank you for the wonderful session. I think my question revolves around self-assessment for individuals, especially individuals that say have remote work or they don't particularly work under a corporate setting in that sense. So I know that for business, they must self-assess and they file returns based on their profit and loss. But how does it work for individuals now when they have to self-assess? That's the question.
Okay, thank you very much. So the idea is this. Yes, the competition is not straightforward, and you need to understand that when you have your income, for instance, what comes to your account, there's a need, like I told you earlier, currently we have some allowable deductions, and part of it is your CRA pension. Obviously, if you don't decide in your mind to pay any money to pension, your employer will not pay it for you. So the only allowance that is open for a remote worker will be the CRA. Now it will become the rent allowance. So once you take out the rent allowance and the balance that you have to run it through that graduated scale I showed you earlier. That's how to compute your tax. Then you now need to confirm, where do I stay? If you stay in Ogun State, you need to be registered with OGIRS. That's the Ogun State Internal Revenue Service. If you stay in Lagos, LRS. If you stay in any state in Nigeria, you need to register with that state Internal Revenue Service. After you must have computed your tax year, then you now, depending on the state, for instance, Lagos has e-tax. You can register on e-tax and file your returns. The due date for filing is March every year. And March every year because you would account for January to December of last year. But for people that are engaged under an employer, they typically file theirs in January of the next year. So for you, you're meant to compute your tax after you must have. So when you talk about the deductions, you may not be able to take out things like maybe your light, maybe you want to try to compute the units that you use just to create an expense. For individual purposes, all those things are not allowed. The only allowed expense going forward will be that rent, allowance, pension, NHF, and the likes. So when you do that computation, the balance that you have to run it through this calculation. Then the tax that is payable, there's a way to also make those payments. So it's more of you calculating it, and depending on where you stay or the states that you stay, you're meant to file those returns March every year. Does that clarify?
Yes, it does. So what you're saying is that for every other expense that does not relate to those things cannot be classified as allowable expenses.
Yes, there are specific allowable expenses in the Act, so it will not be classified as allowable expenses.
Okay, thank you.
You're welcome.
All right, thank you so much, Christiana. Does anyone have any question, please? If you have a question, kindly raise your hand up so that we can attend to your question.
Do we have anyone in the chat?
So, yes, Adedeji just responded to one.
You can
just responded to Isiakai.
Okay.
Okay, so we have Ololade. Ololade, please kindly unmute your mic and ask your question.
Hi, good evening. Thank you very much for this, Christiana. I appreciate the session. I wasn't able to join early, so I don't know what a few explanation might have been around someone that freelances, because I think I was thinking that was similar to what Isaka was asking, but for someone that does freelancing, say, you are not working for a company, but you have clients. Do you get? Because I work as a research analyst sometimes. I also manage. I basically know what, I don't know if you get what I mean by someone that is freelancing.
Yes, I get it.
Yes. So my income is not coming from one person. It's coming from different places. So in that situation, how do I do this tax filing? What am I expected to do? Because I had worked as an employee before, so I have my tax ID.
Okay.
Yes, I have all that. My company, we used to pay tax before. I just left that in February.
Okay.
So since then, I've not paid tax because I wasn't working for someone, and income has not been stable. So I don't want to be caught unawares. So I want to know what to do. And then the second thing is, for someone that manages an NGO with team, the NGO is registered, it has this SCORM certificate, and every income we get, I have record for it since we started. That's how much we've been detailed. So I don't know what we are supposed to do in this space where we're talking about tax, because every income is being used, and I have the details since 3 years ago. So I want to know, what are we also supposed to do in that space regarding tax? Because I believe they feel everybody is supposed to file for tax. So that it doesn't look like someone is squandering money somewhere. I just really need your clarification. Thank you very much.
Welcome. So as a freelancer, as long as you earn income on freelancing, you're meant to account for it like an income. It's not determined by the number of sources. So the idea is, once an income comes to your account as an income, you need to account for it. So the idea is track those income on a monthly.
Okay.
Because you're meant to pay as you earn on a monthly basis before the 10th of the following month. In January, the salaries that you pay January, in January, for instance, should be remitted. The tax on it should be remitted before 10th of February. Like that. Then, for people that are under employment, their employees will not collect everything and file it in January. But for individuals that are self-assessing by themselves, they would file in March. But they are meant to be remitting the taxes on a monthly basis. And guess what? If you don't remit it on a monthly basis,
Yeah.
you can actually pay penalty for paying late. You cannot say you wait till the end of the year and pay together, because it is actually due every month. So track your income every month, calculate the taxes on it, and remit to the LRS if you stay in Lagos.
Okay.
That's that about the freelancing. Then the NGO bit is, if you're registered as an NGO and you've not deviated from the course of that business, meaning, because not NGO is registered for not for profit, so in actual, so you're not making profits, so there's nothing to be taxed in that side. They're not asking you to come and be taxed because NTA has now been enacted. Once you state to your costs as an NGO, taxes are not relating to them. So that answers that. Is that okay?
Yes. Thank you very much.
Okay, thank you, Christiana. There's a question in the chat box from Mora. It says, what of if an instance where some... Can you hear me, Christiana?
Yes, I can.
Oh, okay. So I want to read out a question from the chat box. It says, what if an instance where some receipts aren't available to show proof of expense, e.g. consumable bought from petty traders? Do we just type it out and hope the LIRS believes the figures? Do you understand the question?
So when you say receipts from petty traders, are you talking as an individual or as a business name?
I guess it's talking as an individual, because it said consumable bought from... Oh, Mara, if you are still on the call, please kindly clarify your question.
Yes, from as an individual, because since we know that most earners are actually from small SMEs, so majority will deal with little consumables. So yes, from an individual.
So I want to understand, you're saying that you bought something from a petty trader and you don't have receipts for it. Is that what you're saying?
Yes, because most petty traders, they actually don't deal with receipts.
Yeah, they don't do that. So the idea is, yes, you know that bit of it that you bought from a petty trader, you need to account for it, have a record of it. So you know, the idea is you're not meant to provide 100% evidence, but make sure that the petty trader transaction will most likely be very, very minute amount, and for it to be big, then you know that there has to be something. But in instance where they are not nothing, but the fact that you have accounted for it on record, you have a record of it, not because you have receipts, but anything that now relates to huge amounts and all of that, you would most likely want to engage somebody that can give you a form of evidence. So like I gave you the instance of people transacting with people without TIN and all of that. When you already know that there are some level of transactions that I think I need an evidence for, you would rather buy from somebody that will be able to give you a receipt. And I used to think about it. Some of those receipts you get from restaurants and the likes, before you know it, it feels like it wipes up or it goes blank. How much of it will okay, maybe we just scan it and keep record of it. So all of that can be useful. But even as an individual, I don't think you need all those receipts. Like I said, allowable expense for individual is not all of those. They said you're managing a business. But if you're talking about this expense for you to deduct majorly because you want to calculate your own personal income tax, those things are not allowable, basically. Does that clarify?
Yes, it does. Thank you so much.
Welcome.
Okay, thank you so much. I have like other two questions. I'm just going to mention together. One says, what if... Can you hear me?
Yes, I can.
Okay. One says, what if you don't earn monthly? Then the other person says, what if it's a food business and you buy goods from petty traders like pepper and meat?
Yes, like Mora asked, if it's petty, you can't force them to give you receipts. Yes, but you need to be able to tie those conversations to say that, yes, this is 2 amounts, I use this for XYZ as a business. Please, pepper and meat for you to, it's part of your raw materials as someone that cooks and all of that. So you need to practically just account for it as your cost and be able to, you might not be able to show receipts for it, but you need to account for it as your cost, basically. Account for it timely, with records of maybe the time where you got it and all of that, and it's maybe attached to a particular purchase, maybe a particular order. Somebody asked you to cater for like 500 people, and the inflow came in at so time. So when you're about to maybe go to market, when you're maybe withdrawing from a POS, you can tag those things, or you put a proper description to say that cost of whatever for XYZ transaction, or for, you just make sure that you are tagging it in a way that, because I still feel like very few occasions we see ourselves having like maybe too many cash that don't go through the bank at all. So at every instance where your monies pass through the bank, make sure you're describing it well. If it's for you to withdraw cash to go and buy those petty things, describe it as cost of XYZ, tie it to that particular order, so that way you're able to understand that yes, this is tied to it. That way we can properly manage the record keeping bit of it. I think I missed the first question, but I've answered the second. Can you repeat the first question, please?
The first question says, what if you don't earn monthly? Maybe this person is for instance like you don't earn monthly, but money still comes into your account.
Yes, like I said, when I say remit taxes every month, it means that money came in that month before you remit it. So the only time you have to file, like like you asked, when you were asking about do I need to file, is the March filing I mentioned. So it's not because you'll be filing every month. The only time the obligation every month is to remit taxes, and any month you do not have income, you cannot remit taxes. So the idea is anytime you remit you have income, calculate the tax and pay the tax before the 10th of the following month. Anytime it happens in the month, you cannot say it happens on 31st, it was too close. They give you 10 days to calculate and pay before the 10th day of the following month. So that's the idea. It's not about the frequency of your income. The frequency of your income at the end of the day, when it's anything you have between January and December, by March of the following year, account for it and file. But you have paid them at the times that it happened. So the idea is payment of those taxes are monthly, depending on when you get the income. But the filing is once. That's March for self-assessment individuals. But for companies that do it for their employees, they do it in January, like I said. So does that clarify?
All right. I think the person that asked this question is still on the call. So I guess the person must have gotten his or answer. So before we wrap up, do we have any other questions? Okay. Okay. While we wait for other persons to come up with questions, I have a question. Well, I really don't know. It feels like a funny question, but I think you've answered it. But I just want to get like a clarification on that. So, for instance, now I have a job. I'm doing a job, like I collect a job. I help my friends to keep their money, and for instance, like they pay me 100K, for 3, and maybe at the end of the year, am I supposed to remit that particular amount, because it is not my income? I'm helping people to save their money.
You're helping people, but they paid you for it. It's an income in your hand. Okay.
It's not my sweat.
Wait, you are doing something. You rendered a service. You added value by helping them collect their money, right?
Yes.
For doing that, they paid you 100K, for instance. That 100K is an income in your hand, and you don't even need to wait till the end of the year. You need to account for it and pay the tax on it the 10th day after the month in which you collected it.
Amazing. Wow.
So you need to do that. So, and another thing about all this ajo, let them be describing it very well before they come and ask you that, Funke, we saw 10 billion in your account. Come and answer the question. So let descriptions be top tier for us going forward. So if you're not taking anything from this conversation, the fact that yes, I know about the Reform Act, there are 4 of them. What will I be doing differently? I'll be transactions that I do, especially on my apps, on my phone, from my bank account. I will describe it in details. Inflows from them. Even people that are sending you money, please tell them, describe this money, please. Because from January 2026, I don't want to be shalaing. I cannot be remembering the 10,000. Maybe it's only a maker that the description will show. I'm like, which maker is this person? So all of those things would be able to avoid it if we properly describe those transactions, and also ask people that are sending us money to describe it. Another thing is this. Let me mention this because yes, we are in church. It was organized by a church. Honorarium is taxable. So if you go for maybe a speaking engagement and you're giving an honorarium, it's an income in your hand because you did not get it for free. You did something. You exchange value. So that honorarium in your hand is taxable. You should declare it and pay taxes on it. So there's so many other things that are taxable. Like I said, let's jump on that section 163 I mentioned. After we must have downloaded it on the fiscal reforms website so that we can see anything that relates to us that is not taxable. That way we are saying that yes, I understand that, see, I missed all of this by income. This particular one is not taxable. You're able to hold on to it because it relates to you. We cannot go into details of what everybody does, but that way you're able to look into the law and see the one that really affects you. Okay, does that clarify?
Yes, thank you. Yes. So before we wrap up, please, do you have any other question to ask Christiana and our colleagues before we end this session? So while we wait for that, I'm very sure that we all have jotted one or two things down. Like you said, even though you don't take anything out of this conversation, what you should take out is the description of, when you send money to a particular person and when people are sending money to you, make sure that they describe it so there is clarity in case the story comes up and all of that. Ayora, you have a question? Can you unmute your mic, please?
Hello, ma. Please, I just want clarification again. I don't know whether you have mentioned this before. So, when you say that it should remit monthly, what if the total money of everything, like your freelancing and all, speaking engagement and everything, is not up to the 800,000 and you are remitting monthly? Like, I don't.
Okay, so this is it. When you look at 800,000, it's annual. And when let's even assume that 800,000 is your income, because I already said to you that 800,000 is not meant to be your income. It's meant to be your chargeable income after you must have deducted that rent allowance that I told you about, right? But if we assume that 800,000 is the final landing after you have deducted your rent relief allowance, the monthly allocation is about 60-something thousand. So if on a monthly basis your inflows do not exceed 60-something thousand, you can decide not to. Do you understand? And you already envisage that for the whole year I will not exceed 800. That's the condition. You have an idea that my monthly is not up to 60,000, and at the end of the year I don't think I'll be able to, but nobody wants to end that low till the end of the year. So the idea is you need to confirm that monthly I don't have up to 60-something thousand coming in. Once I have like maybe 100,000 coming in, please start calculating and remitting. And guess what? When you calculate like that, you're meant to calculate like an annual figure. Then you now prorate it. Like, it can be complex, right? But it's just for you to seek the right counsel basically and the right person to advise you. It's not, I wish it was just a flat rate, but it can't be flat rate so that the low income earners can breathe. But the idea is, check it. This is like a rough estimate. Check if it does not exceed 60,000 every month, and you envisage that you will not exceed 800,000 for the whole year. That is the only condition that will make you not file every month. Does that clarify?
Yes, it does.
Okay.
We have another question now. So after this question, we'll take, say, one or two questions and wrap.
Okay.
Transfer to vendors using the bank tellers. There is no way we can write descriptions. How do you explain it to tax officers?
I didn't get that. Can you repeat the question?
It says, what about people that do transfer to vendors using the bank teller, like people that go to the counter to transfer money to a particular vendor? And it says that there is no way we can write description. So how do you explain it to a tax officer?
So you're saying that you go to the counter to transfer to vendors. Okay, yeah, there can be some cases, but have you even asked the bank teller before that? Can you add this description? Have you asked? Because I feel like it's not something that should be impossible, in my view. If you have not asked, maybe you should. Because typically, very, very few people still go over the counter to transfer to vendors. But if you do so, just take your time to practically ask, because in actual sense, the essence of this description we are talking about is to make your life easier, so that at any point you are called upon to explain what this inflow is about, you not be worried or you can have a backup record where you can account for those things per date. So that way, once they call you for any questioning or they raise an assessment on you, you can easily just go to your record and say, see, this particular transaction relates to this. So that would be like the alternative. But just take your time to even ask the person that is helping you transact to say that, please, can you include this description while you're transferring this? Maybe the feedback, you would be able to know. And if the person is not able to, just have a backup record to account for all your transactions so that you can record of them.
Okay, I'm very sure that the person that asked this question is still on the call and he has gotten his or her answer. So we have like 2 last questions.
Okay, I can hear that.
Okay, so we have like 2 last questions now. So these are the last questions we'll be taking for today's session. Does the tax comes in before tax or after tax? And the other question says, for rent relief.
Yeah.
And the first question is, does your tax comes in before tax or after tax?
Does your
That's
what?
question 1.
And
the other question is, for rent relief, what are the documents? Does your tithe, can you hear me?
I didn't get what you're saying.
Does your tithe comes in before or after tax? Can you hear me clearly?
I didn't get, you say type, or what did you say?
The question is, please talk about tithe. Does your 10%?
Okay.
Yes.
Okay.
It said, yeah.
God, I mean, so it doesn't come, it's not an allowable expense. So the idea is when you pay your tax, after you pay, because if you work under somebody, they would have removed the tax before they pay you the money. So it's still similar. When you pay you would have paid your tax, or they would have deducted it before you now talk about your tax. Your tax is not an allowable expense, everyone. What's the next question?
Okay, so this is the final question. It says, for rent relief, what are the documents the tax man is looking out for?
So for rent relief, yes, it will be most likely. Can you hear me? Hello? Can anyone hear me?
We can hear you.
Yes, so
okay,
for rent,
you went up very well.
Yes, okay. So for rent relief, right, the evidence would just be the evidence of payment of your rent. That's the document. So the idea of this is mostly to just maybe pull in more landlords into the tax net because they want to record of those things. So I think that was one of the initiative around this relief and all of that. So once you submit the evidence of your payments, sometimes it might not be January to December like the normal, it might be March to February, it can be even more but make sure that for the whole year you have record of the amount that relates to January to December. Even if it will make you combine 2 receipts, meaning that you have to prorate, just have record of all your payments come January 2026. Thank you.
All right, Christiana, thank you so much for taking out time. If you have like a business, if you're a business owner, make sure you separate your business account from your personal account so that you don't have, you cannot be shalaing in Christiana's words. And also make sure that you have self-assessment, like you assess your income and keep records of all of your cash flow to avoid plenty talks. And again,